And in this case, I will still be solving the same question using the direct method. Don't forget, I told you that what differentiates direct method of presentation and indirect method of presentation is only the way we present our operating activity. No matter what you are doing, either direct method or indirect method, your investing activity and your financing activity will remain the same. So let us look at how this will be, assuming I am using my direct method. So I will come here and prepare statement of cash flow for which company? For Global PLC. So statement of cash flow for the year ended September 2014. So in this case, I will start with what? Cash received from customer. So which means that I will definitely have a working note, additional working note. So working note 1 year, cash received from customer. And don't forget, who are your customer? Your debtors. So for my debtors, balance brought forward, I will come here. For my receivables, that is 60,000. So I have 60,000. Now, if at the beginning of the year they are owing me 60,000, which is here, we sold to them during the year now, revenue, that is our sales. We sold to them during the year. Our sales to them during the year is 500,000. So which means that the expected balance at the end of the year is expected to be 560,000. If I'm expecting 560, what is the actual balance? Balance carry forward. The actual balance I get here, according to my statement of financial position, is actually 75,000. So if it is 75,000, you are expecting that they will be owing you 560,000. But on getting here, you realize these people are owing you 75,000. It means that during the year they've settled you in what? In cash. So let us press our calculator. What is the difference and how much have they what? Paid. So I will press my own calculator here. Going to my calculator, 560,000 less 75,000. So it means that there is a cash paid of 485,000. So the difference is as a result of cash paid by our debtors and the cash paid, according to my calculator, is 485. So I will come here. The cash I received from my customer, okay, note 1, 485,000. I will go again. What's the next thing? Cash paid to creditors. Your creditors are your supplier, right? So working note 2, I need to come here under working note 2 now. So for my working note 2, that is my trade payables. So for my trade payables, I will start balance brought forward. My balance brought forward for my trade payable coming here is actually 90,000. So I put 90,000. Very easy and straight. Now we purchase from them during the year, so we need our purchases. Now another problem. If you come to your statement of profit or loss, we can all see that we have cost of sales, but we did not have purchases. So if that is the case, can we get our purchases? Yes. Let us go. So working note 3. Working note 3. That is determination of purchases, Abi. How do you determine your purchases? Very easy. I will come here. Opening stock. Add what? Purchases. So what is our opening stock in this question? My opening stock, if I come to this statement, my opening stock is given to be 80,000. Add purchases. I don't know purchases. Less closing stock. What's my closing stock in this case? My closing stock in this question, if you come here, it is what? 100,000. Now, don't forget, opening stock plus purchases less closing stock is what gives us what? Cost of sales. So what is our cost of sales in this question? We are given. So I can come here, my cost of sales is given to be 300,000. So if I come to this place, 300,000. So this plus this minus this should give me 300,000. So I can go back to my calculator and say that 80 balancing figure will definitely be 320,000. So I will come here, come back to my working note 2. Under my trade payable, my purchases has been determined to be 320,000. So if it is 320,000, at the beginning of the year we were owing our supplier 90,000. We also purchased item worth 320,000 from them. So therefore we are expecting to be owing them. So our expected balance at the end of the day is meant to be what? 320 plus 90. That will give us 410,000. That's our expected balance. But if you check your statement of financial position, what is our balance carry forward? In my statement of financial position, it shows that I'm owing my trade payables 60,000. So how is it possible that expected balance is 410 but I'm owing 60,000? It means that the balancing figure, which is the difference, is our what? The cash paid. So how much will be the cash paid in this case? So from 410 it goes to 60. It means that we have paid them 350,000. So I will come here, cash paid to supplier is an outflow 350,000. So I'm done with that one. I move to the next one. Cash paid for other expenses. So cash paid for other expenses. So I can come here now. Working note 4. So the next thing is to go to other expenses. Now cash paid for other expenses is very easy. I will come here. My other payables is 40,000. So we have balance brought forward to be 40,000. So I will go to my profit or loss. What are my other expense? The only other expense I have here is admin, which is 29,000. If I also have distribution cost, I will have added both of them together and I will bring them here to be what? 29,000. But don't forget, in part 1 of this video, we established that there are some non-cash expenses that we have in this question, and some of the non-cash expenses is what? Depreciation and what? Impairment. So let me go back to show you again. We determined that depreciation, which is a non-cash item, is 20,000, and impairment, which is a non-cash item, is what? 10,000. So if I less the non-cash items from this, I will be having an expected balance of what? 39,000. So look up. I have expected balance of 39,000, but my actual balance carry forward, rather, according to my statement of financial position under other payables, is 20,000. How will 39,000 become 20,000? It means that there is a what? A cash paid of 20,000. So the cash paid here is 19,000. So if I pay 19,000, that is when I can have 20,000. So I was owing 39,000. By the end of the day, they told me that I'm owing 20,000. It means that I have paid a cash of 19,000. So in that case, it will go. So I will come here under my cash pay for other expense as determined by us. That is 19,000. So very easy and straight. So if I do that together, I should have a total of what? Let everybody press calculator. I'm on my calculator also here. So on my calculator, I have 485,000 minus 350,000 minus 19,000. So in this case, I've pressed something wrongly here. Sorry, 480,000 minus 350,000 minus 19,000. So I have 111,000. So with less interest paid and taxation paid, as calculated earlier, my interest paid is 1,000 while my tax paid is 50,000. So I will come to this place, very easy. Interest paid, I will come here, less my interest paid of 1,000, and for taxation paid, as calculated by us earlier, we less our taxation paid of 50,000. So by the time we do this, we should have our cash flow from operating activity. Now let us see if this will give us the same figure as we got earlier under what? Our indirect method. So if you add this and this and this together, let us press our calculator. I'm going to my calculator now. 111,000 minus 51,000, that will give us a calculation error. This minus this is expected to give us 116,000. So this minus your interest paid minus taxation paid will give you your what? Cash flow from operating activity, which is what? 65,000. So if you look at this, my cash flow from operating activity using direct method give me 65,000 as earlier done. If I come here, when I use my indirect method, what is my cash flow from operating activity? 65,000. So no matter the method of presentation, the answer we are going to get will definitely be the same. So this is the end of first question. We also take another question to deepen our understanding of the topic.